1 2 1 2 1 2 1 2 1 2. Now the sound should be good. All good. Okay, thank you, Henry. Okay, it should work now. Okay, ladies and gentlemen, so let's see what we can do and what we can discuss. I will fulfill a wish for you before we are 1 week before Christmas. And so if you have questions, if you have need to discuss something with me and maybe as well with our team, if I can answer, I will do so. I will answer your question. I will go into the discussion. And okay, Alan, thank you. Great. Thank you for the feedback regarding the sound. Now let's have a look here. That's quite interesting. I'm sharing my screen. I'm sharing my screen here. That was a very, very nice action. Excuse me, action here around 39.50, and you see sweeps as well icebergs, sweeps and as well icebergs here on your chart. Or if you're following TradeFinder, you will see this phenomenon. So that's what we discussed yesterday in the room here with some traders here, S-Trader and others. I think it was yesterday very late, so my time at least. And by that, I would like to say that icebergs, we have a very short iceberg discussion. Go back to the room, the Discord. I'm talking about the Discord room. And, you know, icebergs can be executed or transacted and passively and actively. And when you see a sweep here and you have the time, I don't want to do it so right now here, but if you have the time, go and look what's behind the sweep. And this sweep, 500 lots traded here, for example, or 322 lots, 322 lots have been traded as an iceberg here. So that's really the complete picture of the market if you are using and utilizing TradeFinder for your trading. That's an incredible insight what the market is doing. Now, however, the market is dropping down, further selling off. That means the bid side is not so strong for at the moment. Hi there. And the bid side is not so strong at the moment. We will see if we can, if the market will bounce back. Keep in mind, you know, we have seen this, how to say, surprises all the last days. So keep in mind that the gap is far above above this the current price. Nearly 93 points above 41.40, and the market is still selling off here. So if the market is not in the mood to buy and to close the gaps, then it will do maybe in few days, who knows. But anyway, keep this information simply in mind when you when you trade. As an information about the market, it must not be traded today or not happen today. That's for sure. But simply keep that in mind. So let's see what this action is about. And when you see this action of the sweeps here, you will see this in the native iceberg dome. We have the dynamic hidden order plot. These are all icebergs. Every single native iceberg detected with TradeFinder in the ES based on MbO data is plotted graphically here in the hidden order plot, which is really a helpful and useful tool just to avoid more distraction on the chart if you see a lot of numbers. We have had this discussion yesterday. And by the way, we have we added a native iceberg dome and TradeFinder. You can put it on the chart, and we have that as well for the synthetic icebergs, as well for the native icebergs. And you see the same, that this huge amount of icebergs or sweeps traded with icebergs here, as well here in this big green area or green dot here, on the yes, on my screen here below, and as well in the dome here. You see this. We have 3,730 icebergs traded on Ask, and only 339 on. Excuse me, 3,740 icebergs traded on Bid. On Bitcoin is Bid, and 340 icebergs traded on Ask. Hi Spy, good morning. Great. So stay with me here. Let's see if the market is strong enough to trade back. So someone is maybe placing his orders here around 50, and he hopes it could be. So I'm not sure, but that might be someone who is buying and expecting the market to come to trade higher. We will see that today at the end of the session. It doesn't mean when we see this cluster of, it's really an unusual cluster, and it's really first time I see that in this many clusters here, this traded volume here. It doesn't mean if someone is trading, and maybe for some of you who are following me, we have the discussion with the market goes steady up and someone sells 5,000, 6,000, 7,000 contracts. We are with sweeps and icebergs selling. Yes, he's selling, and the market goes up 20 points, and then at along the trading day, the market drops down 20, 30 points, and he makes simply a good cash on his position here. That's an assumption, of course, really. Because we don't know what's behind icebergs. We can speculate, but I have seen this kind of this behavior a lot of times in the chart, so that I have some ideas about what this could or might be in this case. So if someone sold 39.50, bought 39.50 here with a decent amount, that means 3,000 something. Then the market drops further down. That means the market is trading 39.30 right now. We have here few nice volume stops here as well. Let's see if this is will be broken, or will be broken, or will break the next hours or whatever, to see if the market is really strong enough to trade above 39.50, given this is a guy or an institution or whoever, he is placing 3,000 lots here for buying. That means he expects the market to go up. That's my interpretation, ladies and gentlemen. I'm sharing my thoughts with you. So if this is the right assumption, then the market will trade back, and if the market trades back above 39.50, 60, 70, he will make a nice profit based on his long positions here, if that is true. But this is simply only my experience, my observation on the market here, and let's see what happens here. So yesterday we have had a discussion about the volume stops. I hope the guys are in the room here as well. Not sure, but anyway, I'm talking about the Discord room, of course. We have had some interesting discussion about market volume stops, because I think the idea was that they are not working 100%. So if you get a sign here and another sign here, sometimes they are not working. And what I'm saying is, we don't manipulate data. What we do with the TradeFinder, we try to understand what the market is doing behind or below the surface. And that means we are analyzing the data, or TradeFinder is analyzing the data. We think that this analysis and this market data input is valuable to find possible unusual activities in the market. One of them are stop runs, of course. I don't know whether we saw them yesterday, but I wasn't around, so today I didn't had anything here on my side. But anyway, it must not happen every minute, every 5 minutes, every hour. You know, TradeFinder is simply analyzing the data input. And when the data comes in and you have set up the TradeFinder, or you are filtering, or you are defining what you want to see, then you have to wait until it appears on when it appears on the chart. And that's simply the point, that some of us traders or think we must get signals every single minute, which is not the case, and that's what we don't want to see. We don't want to see a bunch of data on our chart. We want to understand what the market is doing. We want to understand where the market is heading. We want to understand the direction of the market. And you know, I'm talking every time every time in every session about my approach, and that's simply, I'm looking for the trend. If the trend is clear to me, either I'm in the trend and or I'm waiting for pullbacks. I'm using TradeFinder for timing my trades to give me reasons to understand what might happen here, and then I'm writing the trade if I get in. So and then the last point is I'm watching and I'm obeying, of course, the levels I see right now here. Just I'm talking here, but I'm a little bit distracted. I see this is an institution level. Let me have a look here. 35. Yes, it was, what was it, 35 or something. Let me draw a line here as well. So that was announced long before, not long before, but before they opened, for sure, before they opened. So I'm obeying these levels as well. These are institutional levels. For those of you, I'm not selling them, I'm not marketing, I have not the rights to tell what's behind. So I'm just labeling them with the institutional levels, which is a very common expression here. You can use it for free. Join our Discord room. There you can add the cloud nodes as well for free. By the way, we have developed an indicator for NinjaTrader as well, and you can use the NinjaTrader indicator to draw the institutional lines. I'm preparing nearly every day when I'm around here, when I can. So just obey them. They're really, really, really good. And the best point is they are for free for you. So there are a lot of comments here. This is they came from the Discord question. How do you interpret absorptions on the way up and down? I'm waiting for big absorptions here. So absorption happens all the time. You know, absorption is a very simple process. So if you are buying GB, I think GB, yes. If you are buying to me and I buy the good from you, then we absorb everything you have. And that's simply absorption. Now the question is, what do we need for absorption? What do we want to see? What is the best absorption for an instrument? That's a really quite a difficult question. Or, yeah, not a question, but it's difficult to answer. Everything we discussed yesterday, is based on volume and liquidity. ladies and gentlemen. And I'm really not tired to tell you, everyone, even if you resist to listen, but every instrument trades with its own volume and its own resting liquidity. It doesn't matter whether you are trading cryptos, stocks, futures, or whatever. It's always the same game. It's always the same game. I'm not tired to repeat myself every time, because that's an auction. It's a dual auction. So the dual auction happens between you and someone who is willing to sell something to you, or who is willing to buy something for you. That's always the same mechanic. And the TradeFinder trades, ES future trades with a different volume than NQ. NQ is much, much thinner. Have a look at NQ. Or Russell, the best liquidity, if you are patient and can wait, then please trade treasuries. What I would recommend for those of you who can wait, who want to get the best fill, I'm just watching the chart here, who want to trade the best fill, trade treasuries. It's really, in my opinion, the best instruments to trade. So we are using ES because it's somewhere in the middle between treasuries, or was in the middle between treasuries and thin and liquid instruments. So it's very good. TradeFinder is very responsive based on the ES future. It's as well responsive on other instruments, but it's the best. Yes, it's one of the instruments where you can must be patient, or can be patient, or sometimes it works really fast, or goes very fast. Dynamic hidden orders are just, yes, Alan, these are native iceberg orders. The hidden order are just icebergs. We can display native and synthetic with stocks. That means if you have the dxFeed, you don't have MbO data. So you have not the depth we need to analyze sweeps and stop runs and sweeps and native icebergs. But then you can analyze synthetic icebergs. Synthetic icebergs are more tricky. I think Bookmap has a similar function, but I'm not sure if the numbers you will see are helpful for trading. So I'm just on the native side. No, Alan, you should not, because that's not of help. We have had this discussion yesterday, guys, and I'm public now on YouTube, and I want to answer the question. No, it is not necessary. First of all, it's not necessary because TradeFinder is the most complete market analysis tool you will see. And by the way, even the native icebergs, the detection of native icebergs is complete. That means you see what I've mentioned before here at that point when we started. You remember that? Icebergs can be executed actively and passively. And that means we are I can only say, I want to only say, use TradeFinder and as well the stop runs, of course, the icebergs, the stop runs, and for much, much more, please go to our wiki and see as well our page, TTW-TradeFinder, and you will see how complete, I would like to say the word complete, TradeFinder is. It is accurate and it is complete. And it does not, Alan, it does not, or everyone here in the room, it does not distract you. You know, I'm a fan of keep it simple as possible. And when I'm saying that, I mean don't interrupt don't overpower your brain with nonsense information on the chart. So be very cautious with that, because it's not an indicator, it's not a chart, it's not a charting system. If we can't work and if we are not successful as traders, then it's not a charting system. I think it's not, maybe not an indicator, it's simply we as humans. So we think we can work and we can manage a chaos here on the chart, and the more we add, the less we can make good decisions. So Alan, I hope I answered your question, and we have had this discussion yesterday in the room. Please go back to the room, and I've put some more arguments why to use TradeFinder. So the green sweep, yes, this is it's a green sweep. So that means when you can go to the TradeFinder. I just don't want to add a lot of information flags on my chart, because you know I'm used to. You watch or click on the professional view. You see the sweep was executed through 9 ticks, 889 contracts of 1,000 have been actively traded, and passively, that means by icebergs. You don't see the icebergs because I've set the size of the iceberg I want to see to 300. So you will see, if you drill down here, that the sweep, you will see 889 traded actively, and passively 111 is traded with icebergs. So that means 1,000 have been traded, and that means someone bought 1,000 contracts. And keep in mind what I mentioned before. So that was a very unusual activity here at 39.50. And what happens? The market dropped further down, 50 to 35, 15 points, bounced off this institutional level here, which was before long, which was on my chart or in the room, in Discord room, before they open. And then now we see some interesting activity, buying. I wouldn't be surprised if this market ends in a positive area here, in the green area today. So, but who knows, maybe something happens in the market and we will get a contra signal here, contrarian signal, so the market can drop down, of course. But keep in mind, just to be sure, that we have now maybe 5,000 let me say in that words, someone is 5,000 contracts long. It's only my interpretation. It's how I see the markets. Yes, so Spy, I've answered your question. Alan, try to switch. It's better. I promised you, because I know what the stuff is. You know, you see the stops in case you have the Market Volume Pro, and I would like to encourage every one of you to use the Market Volume Pro. Oh, sorry, I haven't activated it to display. Let me show you something here. We have two products, TTW-TradeFinder and TTW Market Volume Pro. Market Volume Pro is offered, or you will find it on Bookmap Marketplace. Advanced Market Volume Pro. Give me a second until the Market Volume Pro loads, and then I will show you something, Alan. Let me switch off this. In case you have Market Volume Pro, you can do following. It's very a rough comparison. You can, in Market Volume Pro, you can define the exponential time. Let me see if that works here very fast. And then what you can do, simply add the Market Volume Pro V delta and skew or define the exponential time of the It's still calculating. So, and then compare it with a stop line here. You will see, let me say, a good, well, come on. You will see a very, yeah, you will see a similarity. I want to switch off this and coming back to our samples here. Just compare it. You know, I'm not saying against any other product, anything. So I'm convinced, and I know what we are doing, and know what our colleagues as well are doing. So we know that very well, and I can say that TradeFinder is the most complete data analysis tool on the market, and we simply following another way, a different way. We don't want to overcomplicate a chart. We want to keep it as simple as possible, and that's what I'm telling you. Don't need 10 lines here in the subchart or whatever you have here. You don't need that. That's too much. That's simply too much for our brain. There are a lot of good books, the Chimp Paradox and so on. Go back and read about our behavior. One of the best books is from Kahneman Tversky. What is short thinking, fast thinking, and slow thinking. So that was, from my point, that could be a very nice, good buying opportunity here. Just let me go back. I forgot what I wanted to do here. And also, yeah, I wanted just to switch off the labels. That's what I wanted to do here. I don't need the sweep labels here, because when you are used to, you can reduce everything. So we look, well, if you're a friend of Apple, iPhones and iPads and Macs, then I think that this display comes really close to the, yeah, to Apple. It's not overcrowded or overcrowded here, and that's okay. Keep it simple. Yes, Alan. Yes, which page or video should I reference to learn how to read the stops in icebergs and TradeFinder? There are a lot of videos on our page, TTW Trader videos as well. We will add an additional information in the next days to the wiki with graphical displays what this stuff is all about. And I was just trying to learn how to read them. Yes, take your time. You can have both. That's not an issue, Alan. It's not just to you know, it's better to focus on one point. It's better to focus on one point than having 10 and then be more confused than necessary. Yeah, Moody and David, yeah, great guys. How would you describe the difference between MV stop and stop volume on subcharts? Now you got me. I have already written a short article about the stop volume here. It is the same as MV stop, but we skewed and we changed the time. We changed the time of this graph here, of this curve. By the difference, there is the only difference between MV stop and the stop volume is that we have the developers decided to change the speed of the MV stop. And that's the only difference. So you see how they are coming, they are nearly similar. But if you want to see the spikes better, I would recommend the stop volume, to use the stop volume. But if you want, and that's as well recommendable and very good technique, look here, when we talk about divergence on the chart, then you will see the divergences based on MV stop much clearer here. See, this is a high volume traded, although the market drops down or goes back until the volume dries out here at this point, at this institution level, and then goes back. It's buying. That's my technique, at least. What I'm using the MV stop to find divergences based on the stop volume. It's a bit harder from my point of view. You see, you can see the volume stop, the divergence here at that point here. It's coming down. It's coming. That's as well one. It's simply, I would say, it's your personal, your personal style on that. It's a personal style, trading style. The stop volume is volume which is used, which is faster than the MV stop. At the moment, that's the best explanation I could give on stop volume here as well. I'm preparing a short description in our wiki. Please refer to the wiki the next days when we publish all the new information there. Okay, no questions on Discord. Good. So let's focus on trading. Moby and David, yes, advise me. SPY, yes. Don't be confused. Simply see the stop volume in comparison to the MV volume stop, market volume stop signal as a much faster graph, as a much faster not line but curve here. So they are similar, but if you want to see the spikes very or sharp, let me say sharp spikes, then watch the stop volume as well. So there's no the difference is in time. Difference is in time. Oh, come on. This is kind of a double bottom here. No, Rithmic does not provide SPY data. You need you must subscribe to dxFeed in this case. Oh, sorry guys, I'm a little bit distracted here with a handling of my entry system, which is a little bit awkward for myself. Target, if I'm raising the target, okay, I'm a little bit unexperienced with NinjaTrader here, but anyway, I'm long here. I'm 35, or let me have a look here, please. I'm just long 36. That's my entry, 36.75. I'm long 36.75. I'm currently, let me see if I can trail what I can do. 39.41, 39.41. Oh, come on. I'm long here, 39.36. I'm long here. So it's up to me to trail this stuff here. Maybe I should take one off here. Let me see if that works. I'm really not so experienced. I think if they hit 43.75 now, I have only 2 in. So my stop is 39.41. Should be 40. That's how I'm trading that. And excuse me, I'm really fiddling around here with a dome here. Maybe I need more education on this stuff here, just to make it clear. So let's come. So I'm long. Finally, I'm long 36.75. That was here, and as I mentioned, in the before, that was a warning sign. This was a warning sign, and the warning signs are still there because, you know, what I think is that there are some ones who are adding buying contracts here based on the sweeps here as well. And I mentioned if they sold, or let me say he sold 90.50 here, and 39.90.50, and if the market breaks 39.50 and trades higher into the institution levels here, into the pre-low and the regular open, which is 75.76 here, then this could be a really nice reversal here. By the way, when we look at this point, and that's what we have discussed, yesterday in the room, you know, some traders are watching the, let me just trail this stuff here, 75. A lot of traders are using TradeFinder in the hope that they will get the signals, to make them rich. Let me say it very hard, so excuse me, I don't want to offend anyone. But that's not true. That's not the point. That's simply not the case, and that's not the point. If you are not willing to learn and give you the time to learn, to mature on with this very unusual view on the market, I would say, because we all come we started with candlesticks in different technical analysis stuff. If you are not used to, then it takes time. It takes simply time to understand. That's quite unavoidable. I'm sorry for that. You can't buy, or you can't buy it, but you can't subscribe 1 month to TradeFinder and saying, oh yeah, it doesn't help me making profit. That's impossible. That's impossible. That's not the right tool, and then you should how to say, you should simply use something else. So which maybe is better for you. So don't use TradeFinder. Don't use TradeFinder in this case, because it takes time to understand, and takes time to trade, and takes time to to understand what the market is doing. So I'm just raising my stuff. My stop is 39.45. If the market comes down, so I will be stopped out. I think entry was 36, so I'm just nice in profit here. Trailing. So I'm using an ATR. If you're using anything else, so that's fine as well. I'm using ATR. Nothing wrong to have a candle chart in parallel on the desktop. Now what you see here right now, I'm still in, and my stop is 39.45.75. I'm ready to exit one at 51 and the next at 54. If that works, let me see that. You know what's totally interesting right now is following. And that's simply the beauty of TradeFinder. That's the beauty of TradeFinder, because now you understand what a market is about to do. You see this dynamic iceberg. You see that dynamic iceberg started somewhere here. Didn't get a fill here. Didn't get a fill here. Excuse me. Didn't get a fill here. Didn't get a fill here. And now finally he added at 39.50. He added at 39.50. That's the beauty of the system, because you see it literally live what the market is doing. It's pushing the price up. It's pushing the price up. It's pushing, excuse me, it's buying. It's buying here. It's buying. Doesn't necessarily mean that the market can't, or the price can't go further down here for 1, 2, 3 points. No, that doesn't mean, but they are simply buying here. Now, the iceberg is still open at 39.50 here. It's still open. You see how they are pushing it back here, using another DID, dynamic iceberg, pushing it higher at 39.50. My stop is a little bit too tight here. It will be stopped out immediately right now, I think. Would like to see the 50 again here. Let's see if that comes in. Be patient, wait. If you are in the market, it's simply luck. You know, you can only manage your position. That's the only point you can do. You can't do nothing about prices or whatever here. Now I'm going to be stopped right now here. I think so. Or maybe I have a luck. I'm lucky by 1 tick here. Yeah, maybe it works. Fantastic. They are not ready yet. They are not ready yet to trade 39.50. You see, I'm keeping my stop here, so either I'm going to win the 39.50 and maybe a little bit more above, or I'm stopped out and cashing in 9 points, I think. But the how to say, direction is up. Excuse me. Move is up, and then 39.50. I want to see 39.50. Hopefully they are going to hit 39.50. That's really an unpleasant time, you know, when we are, or the market is somewhere in between. And the market is somewhere in between here. Because you hope, or we hope, come on, go up. Hit 50, trade 50. Now it's coming. Yeah, it's coming. It's coming. You know that's better than any PlayStation game. Maybe, at least for myself. So I'm not sure. So 50 is finally hit. And if we are lucky, they are going through the 50, but they are defended the 50 again. Let's see what happens. My expectation is that they are simply sweeping and pushing through the 50 here. No, defended. You see how they defended the 50. The next protection is at 47.50. So they are hitting now the next DID and pushing. That's like a ping pong, you know. It's pushing up maybe. 230 contracts traded. The 50 is traded, or have already traded 251, awaiting the fill of next 25. Great stuff, guys. Here, really great stuff. Look here. That's only possible with TradeFinder and with this clarity. So you can only relax, stay, and wait until you see something. When you understand the market, then you take the trade, and then you know, that's what we discussed, or what I wrote in the Discord room yesterday. You will know why you are trading and when to exit. I hope for this 50 again here. Maybe I'm wrong. It doesn't matter. I have still 9 points on my side. My gains are 9 points. Oh, look here. That's interesting. Oh, wow. 3955. And now my hope is that the market will bounce off this 47.50, and I would like to raise my target to 3955. The point here is that if I'm unlucky, and that happens more than not, that the market will stop me out here, or hit my stops here, and then rushing into breaking the 39.50 here, and then finally in 1 hour or whatever we'll trade the 39.55. That's a fight. That's an epic fight here. Look here. I hope the 47.50 is strong enough to give some support. Great story, guys. We have some on some Thursdays. It's totally boring to watch the price action and the price, but that's really something which gives us today a big story. And now let's see if they can break above 47.50, then maybe it's going good, but I'm out of this game. Okay, that's what I expected, because I didn't expect that the price is going, based on my experience, price is going directly to 39.55 here. Maybe they are turning, so they are now breaking down with high volume. And we will see when the market, if the market will trade 39.55. Everything was perfect. And that's what I'm telling you, and in the room as well. Understand the market, and be prepared for the market. That's for sure an important part for the daily session, for the daily preparation. If you understand the market, then wait until you got some good information signals. If you got a confluence based on TradeFinder, on icebergs, on sweeps, on stop runs, on volume stops, on levels, then that's the best. How to say? That's the best opportunity to take a trade. with a high probability. Where do we get the ATR for the instruments we are looking? The ATR is a standard indicator. I think the ATR is a standard indicator. So I'm using a NinjaTrader, and I'm using I'm showing you my screen here. I'm using NinjaTrader. And what I have only NinjaTrader in Bookmap, by the way, in TradeFinder. And based on the indicators, I have the lizard trade indicators here. No, I think it's here. That's one possibility to use an ATR. You have to adjust it according to your instrument and according to time and so on. That's simply only an example how to use an ATR. I'm using lizard trader indicators for NinjaTrader, but I'm sure every single program has something similar. I have to go to the points here. Rithmic knows, Rithmic nots. You have to have dxFeed. I think I answered that. So we had the double bottom, then you saw the green sweep iceberg to enter. I saw, no, I have, yes. You see what we talked about, the divergences. You see how high volume was traded here. And now a very simple line, if you draw a line from here to here, you will see a divergence. That means, please go back. I don't want to teach you or tell you what the divergence is. Yes, Google divergences if you're not sure what this is about in technical analysis. It's the basic of technical analysis in trading. And you see that they bounced back or tested this low here with lower volume, and that makes the divergence. That was another point. I saw this market volume stop here. I saw the upcoming sweep here, but I took the risk because I'm quite aggressive trader. I saw this market volume stops here at the institutional levels. Now the market's coming back here, and I took the 36. In this case, yes, the price somewhere here in between. The risk was below. The risk was 36.34. The risk was to put a stop below the institution line here at 34. That means 2.5 points risk in this case. But based on my view on the markets, I was willing to take the risk here. Yes, GB, it was on the double bottom, but it was the double bottom. It was the market volume stops. It was the high volume traded here at that point. Then the market came back here again to 35, 36 here. Then we saw another market volume stop. We saw a sweep based off sweep about 1,246. But this sweep was a little bit later than my entry here. And then when the sweep kicked in here, that was very clear that the market is going to trade 49.50. My hope was, again, 50 breaking through 50, and you see the DID is still sitting on 39.55. 39.55. That's the yes. This algo is awaiting to be traded at 39.55. He lifted. I think you will see that in the replay, or if you go back to the video after it was uploaded to YouTube, you will see that the 50 was holding here, and then he simply jumped up into 39.55 area and still sitting there. The algo is sitting there patiently waiting. We will see if he is right or not. Doesn't matter. The first assumption, my opinion on the market was, look here, they are hitting the market, they are lifting, trying to lift the market. It doesn't mean that they must do that in the first time, but they will probably do that today, later, before the close or whatever. We'll see that. But, it doesn't matter. But what the market is doing here, you can follow the market. You will understand if you understand what this is what this all is about here. You will understand, and you will you will silence your chimp in the brain, in your thinking organ. It's the amygdala, which is the fear center of every one of us here. You will calm it, because you know what you are doing. Even if you are stopped here, that's perfect. That's simply perfect. You can't do more. And that gains confidence. And that's what you should have in trading, confidence. Therefore, Alan, I think the discussion we have here and yesterday in the room, I'm not a friend of many numbers and whatever charts and hindsight explanations in the chart. We can explain everything hindsight. So follow the market, follow simply the market in real time, and try to understand what the market will tell you or is telling you. Where do we get the ATR? I've answered that. Yes, version 3.7 is the actual version. Please upgrade. Alan, yes, you need to. The ATR, there are different ATR implementations. That's nothing really special. So have a look at your charting system, and where I think in nearly all charting system you will see an ATR. Yes, 3.7 is the actual one. Yes, SPY, okay. Yes, Ramis. Panamas is asking, did you have anything on the SPY? Yes, let me show you the SPY. It's a little bit an art to explain, to comment, and to narrate. Have a look at my SPY here. That was this signal on the SPY I've got here at the same time. No, Ellen, I don't know. No, they are not using ATR. The ATR is simply a volatility indicator, which gives you the freedom to trail. You can, with NinjaTrader, you can build a strategy around ATRs using shark indicators, for example. No, algos are not using ATR. Algos are simply in a total different world. You know, that's not our retail world. It has nothing to do with our retail world here. ATR is something we are using for different time frames. You have to adjust the ATR to different time frames, whether you are using 1 minute, 5 minutes, 10 minutes, or volume bars or whatever bars you are using, doesn't matter. You have to adjust the ATR according. You have to use the ATR according the time frames of your instrument or time settings of your instrument. Yeah, Alan, there's a lot of stuff, and ATR is nothing secret, of course, because the formula is out there. There are many descriptions, articles about the ATR commodity and what is the name of the magazine, Commodity and Stocks and Commodities. Stocks and Commodities, have a look there at their site. Stocks and Commodities recommend it's recommended to have a look there if you are interested in technical analysis. Interesting, the same level here. Same level. Same level here. So it was a great trade, guys, and great example. I'm happy about that, because it gave us so much information only in this, besides the profit I took here. It gave us so much, so good information about this move. What happens on the move? How does it work here at 50? And the protection, let me say, the ID, then dynamic iceberg development here. Wonderful to see how algos are executing on one price level. That's simply, you can't see that on any chart. It doesn't matter what charting system you are using, TradingView, NinjaTrader, or whatever, Sierra, whatever you have. I'm taking a little bit of rest or pause here just to see what the market will do. The interesting point, though, is that we have 39.55 here, and still in the book, is still active. Ladies and gentlemen, that's only possible with TradeFinder, with this clarity. So just to be, you know, it's nothing mysterious to code icebergs, and icebergs are nothing new. It's not a new technology. It's not a new holy grail. It's not nothing new. Icebergs have been there, or are there, or were there since I don't know, decades. So don't fall in love with icebergs. But if you see this kind of or this behavior in the market, so very clear, you know, it's crisp, it's there. As you see on my chart, that's all I have on my chart. I don't need anything else. And it comes then to the levels here. That gives me additional information. Okay, that might be something which is really interesting to buy here from. I'm very aware. I'm absolutely aware that the market is down today. The market is red. The market is red. Yes, it's a downtrend, and I'm doing a counter trade here. I did a counter trade here, and that was another counter trade. But that's my style, you know. I'm preaching wait and wait for the reversals or for the pullbacks to follow. But when you are really good experience and senior trader and experienced trader, then you can take both sides. It's nothing wrong to take both sides. You can profit in a trend market going against it, and you can profit in a trend market going with the trend, which is easier. Alan, no, there are not. I think Denali's data feed for Sierra provides MbO data. But you know, Alan and guys here, I know that Rithmic is, don't hate it, because if you want to have this information, or if you're interested in this kind of information, what we have here with TradeFinder and Bookmap, then we need more. Then we need more information in the data feed or in the data string we are receiving. And if we see delays in Rithmic, if we see delays in Rithmic, that means Rithmic is sending an overhead on information over the lines, over their server farms. No one else is doing that. I'm not sure if Denali for Sierra is doing that. I'm really not sure, because I don't have the experience. But if you want to read a market in this depth as we do here, then you need high quality data. It's not possible with CQG, which is retail data. It's not possible with IQ feed, with kinetic or whatever feeds. This is simply look at the data. You can record the data on NinjaTrader. You can even see what they are providing, high, low. They are providing the 4 states, I think, high, low, and the volume. So far, I know. And that's with this information you can program an ATR, of course. Yes, you can do that, or whatever indicator, but it's not possible to detect icebergs. It's simply not possible. Or sweeps, for example. You can find volume highs, volume spikes, because you are measuring then the time. That's what we have. We have here, this volume spike here. Look here at my SPY chart here. That's a volume spike. That's possible with NinjaTrader, for example, the data they are providing. That's based on time. But it has no further information about what is behind. Is this a single order ID, several order IDs? Is this an iceberg, or it's not an iceberg, and so on. If you want to have a good and thorough understanding about the market, you need the information of data, and Rithmic is providing the data, and Rithmic is annoying, yes, because it supplies us with a bunch of data, and that's not possible simply with one server somewhere, because the overhead of data is enormous. I must say that. As I mentioned, Alan, if you want to provide quality, you need very strong server farms. And that's it. We have to work with it. I'm happy with that. I'm not happy when I've got a delay of 60, 90 seconds. But when the market is calm and working or going its way, then it's okay. I'm tolerating that for myself. It's the best quality we can get for this little money we are paying at the broker for this data. On my side, I'm quite satisfied. The only exception are the delays. I'm see when the market is very, very strong and heavy. Now, what is the market doing now? The interesting point, though, is have a look at the 39.25. I think 39.25, 39.30. We have an institution level. I've put the line here before the open, so that was a part of my prep work to the market. Market is still weak. Market is still weak. So that was a hope. That was a hope here, that the market will break through the 50. You know, they push the market up, push the market up. What I want to see, if these are really buyers here, then I would like to see sellers, so they are hopefully or icebergs, so that they start to cover or to buy back their positions here. But nothing here on the chart so far. Maybe it will happen at the end of the session. If you see then a lot of icebergs, 1,500 icebergs, 1,000 icebergs, and so on, that might be that this guy who bought from beginning from 50 and lower, that he is going to cover his positions. At the moment, there's really no excitement here in the market. And I did a seminar last year, but I'm not doing anymore because I don't want to. First of all, what I experienced is the preparation of seminars is really intense. That means for myself, because I want to provide the best information, and then my experience on seminars and webinars is that you know, I would like to see everyone here understanding this system, but at the end of all this tries and effort I'm putting in the seminars, I see that there's no much, how to say, it's hard to see that the effort will ripe in the traders. Most traders come in, will want to attend a seminar and then start off immediately, which works for sometimes, but it takes simply time, because this is not a system you will start. It's not an instant system. It's not an out-of-the-box system. It's simply, the beauty of the system is to understand the markets, and that's not something you can learn in 1 hour, 1 day, or 1 week, because it's so different. We are giving a lot of stuff for free. Watch our wiki, our live trading on Discord. A lot of information are for free for everyone. And my intentions in not selling webinars or seminars, because I'm a trader and not a seller of webinars and seminars. That's a bit. Hey GB, yes, thank you. Oh, we have a very strong market now. It's coming back to this strong down market. I mean, it's coming back to 39.25. The interesting point, if you understand that, you know, the ES is only the playground for us retail traders here, and we think we will be rich trading ES or NQ or whatever, Russell or whatever instrument, but that's only the playground, and the business is done with options on other markets. And so I'm watching the SPY as well. And I told you that the SPY, that was a signal for me too, to go long at this double bottom here. But when they broke this, when the SPY broke the 390 here, that's a bad sign. That's really a bad sign for recovery here. They cut the liquidity here, and that's really a bad sign for the recovery. I think this is going to be a very deep red day. Doesn't matter. We have to work with that, what we see here. That's our, how to say, task or responsibility. So I'm waiting to see what will happen next. Just give me a second here. By the way, I just want to add before we disperse here after the session. This is the last session. Tomorrow, join Philip with the technical sessions in German for German traders as well, for German-speaking traders as well, for English-speaking traders. We are sending our newsletter every week, but now at least I will take a break until mid of January and enjoy the days. There's a lot of work. We are still progressing with TradeFinder. We are working on TradeFinder, fixing the bugs and adding new ideas. Not much, but the most important ideas. And so the work goes still on, but I don't want to be around like my colleagues from Bookmap and trading even the Christmas Eve and days. No, that's not my style. I think it's good to take a breath of trading and rethinking if this is really something you want to be in the future or not, and take the days to come down, to relax, and to take a break. And think about trading and what you have experienced this year, what you want to experience next year, where do you want to be next year. If you decided to trade, to go on in trading, to proceed with trading. And we have a lot of videos here. We will, yes, we are adding constantly to YouTube and as well Wikipedia. So it takes time. I know it takes time, and we don't want to read. We want to listen just to trade. But I'm sorry, there's no shortcut on that. Again, someone is buying here 2,400. If you count, if you want, what you can do is going through the if you are using Bookmap and TradeFinder, if you have installed TradeFinder, you can simply add these numbers to an Excel sheet and add them, and you will see we have, meanwhile, I would guess 6,000-7,000 of contracts who has been bought here by someone. That's interesting. Simply keep that in mind. Who knows when the market will maybe trade back, and don't be surprised if they are going, you know, yesterday, or when was it, 2 days before, 100 points up and 100 points down. At least I'm not surprised at all. I remember the times when the ES was, when we are happy to get 5 points out of the ES because the liquidity was on each side, 500 and more. And it took minutes to trade one tick. Now it's completely changed. You see right now we have 1,200 market volume in average, and the average liquidity is 80, 80, 84, 90. That's simply nothing. If it drops below 50, stay off, because you will see that in the price ladder, which jumps like crazy up and down. It's not possible to trade then. Sharing my spy screen for you on YouTube here. To give you an impression about the spy. I have many screens here, but I can't share all screens. I'm watching as well the volatility indices, and they are all up. Volatility is all up, so that's one part of my trading, to watch the volatilities, and volatility is up. As long as volatility is up, as long as volatility is up, the market is weak. That's either an break or maybe a recovery, but we don't know. So you see the discussion we had yesterday based on the volume stops here. My setting right now, I'm just observing that and watching that, is I have defined 400. Let me set it to 500, just because I'm testing something here on my charts. So I set them to 500. I set don't want to see them within 3 minutes, or on pullback of 12 ticks here. And the most exciting point is the variable size of the signals here. So if I see 400 and the next is 500 or 1000, the signals will vary in their size here. That is that's perfect, because you will visually see if the square becomes big, and that should be an alert. Oh yeah. So I have changed the numbers here. I'm just watching here. So set it to 500 for the pre-session, or 400 for the pre-session. That means ETH session for those of you or trading before the open, and at the open 1000 is a good size. Yeah, that's a good point. Yeah, that's a good point. Thank you for that. Also notice the exhaustion spike on price dynamics bar right before the signal rise. Yeah. By the way, this price dynamics plot is really interesting to watch. So you see, that was, yes, maybe a temporary bottom. And then the price dynamics plot turns green. That means buys. So no clear market direction right now. It's a heavy, yes, they are selling off this today, and they are still leaving the 40.30 open, 40.37 open. They broke through the yesterday's low. They broke to the 39.75, which was an important level as well. They're now bouncing off the 39.25 level, and very not clear what the direction will be. It is in down day. So first of all, the question is where's the market trending? It's in down day. The trend is clear down. Then if you're looking for opportunities, try to catch the pullbacks. If you're looking to the volume spikes, you will see some here on the way down. Let me have a look here. That's one. Oh yeah, one question of yesterday. Let me just answer one question about the, I remember, use always a technical analysis of charts, and you can use that here on Bookmap too, or in Bookmap. It's not the best one, but anyway, you see this volume stop here. If you know what volume stops are, what is the mechanic behind, then draw a line or rectangle here around this volume stop or that volume stop here. If the market breaks down, because the volume stop, you know, the signals are all true. Even if you don't believe, but all the signals are true. First. Second, you have to adjust them to the actual market volume for your instrument, what you are trading. They are different between ES and Q, Russell, YM, ZB, ZN, ZF, soybeans, or whatever. They are always different. Once you find the right settings for your instrument, and you see this volume stop happening here, or occurring here on chart, then you can draw a line, a rectangle, whatever, and simply wait what the price is doing here. Does it break down? Here it started to break down. Maybe your stop is it. You are pissed off because it didn't work, but the second or third time it broke down here. So you can manage, or you can, yes, you see, you will equalize your loss here, and you will get more in your pocket here by selling. So that's what I meant yesterday. What I was what I'm doing sometimes. Simply draw a line, draw a rectangle on the chart where the stop happens, and then see if the price is coming back or going through back here. Because sometimes, you know, the secret is, or the point is here, if you see a stop, clear drawings, yes. If you see such kind of stops, that means that this signal is true. This is not an interpretation of TradeFinder, because it is based on the data and the settings you did based on the data you are watching or instruments. But if you are trading candles, compare this chart with your candle chart. The most of traders will start to jump on the trade maybe here or here or here, on somewhere there, and they are driving the price a little bit more above the real event where the market, where the highest volume was traded, because they don't see that, they don't know that, they are trapped, they are simply trapped. And what happens then? There are no more buyers who want to lift the offer, or who can lift the offer. There's no demand for higher prices, and then the price drops back. It's a very simple, procedure. It's a very simple procedure. Anthony, I think I answered it before. What's the difference between M-stop and stop volume? Oh yeah. Look here. The stop volume is the same as MV stop, but with a faster line, with a faster line or graph or curve. It's more, let me say, it's more crisp. It's more sharp here. We have added that. It's another timing of, let me say very simple, it's another time set of MV stops here. I will add a very short description on Wiki to the MV stop, to the stop volume. It's market volume stop and stop volume are indicating the same event on the chart. The difference is that the stop volume line is comes with a different time. That means the stop line is faster, and it leads then to very clear spikes here. What is the difference between MV stop and the regular CVD? CVD is a very, very simple. Don't use CVD, or sometimes it might be useful, but CVD is a very simple indicator. What CVD is doing is following. CVD is adding. It's a simple indicator which subtracts or adds volume. It's simply following the volume. You see? The CVD is a simple indicator which follows the volume. So it's very simple. So let's assume there are 10 contracts here where my cursor is, and then maybe 5 contracts have been added, then I have 15 contracts. So 2 contracts have been sold, then I have 13 contracts, 5 contracts will be added, 18 contracts, then maybe 2 ones sold again, 16 contracts, and so on. That's a simple mathematical construct. That means it's adding and subtracting contracts. So it's nothing special here. MV stop and stop volume and the V delta of market volume pro are indicators who are watching the market volume and calculating it based on the happening. You see this on my chart. This is the aggressor volume. That's what we are watching at with the V delta and market volume stops. That we are not adding simply contracts to each other and subtracting them. We are watching and calculating the market volume or aggressor volume. Aggressor volume. That's a very nice word, by the way, because aggressors don't wait until the price comes to them. Don't wait. They are aggressive. They go very aggressive in the market. Anthony, that's something, yes, I don't know. 39.25 is still relevant, but it's very hard to say what they will do here. So there's no significant action here. In the SPY, let's have a look in the SPY here. They have built this kind of, what I see right now, they have built a kind of support here. Very nice to see here. Volume stop in the SPY. At that point, didn't see that. Comes together with this volume stop in ES. But if they are strong to trade higher, to push the price beyond the 30, 40, 50, we don't know at the moment. Anthony, that's the question is why I prefer Ninja. That's because I'm used to, simply. I could do that. I can do that based on the Bookmap, trading off the chart. I think it was a little bit tricky in the previous releases of Bookmap, so I refuse to do so, to trade through Bookmap, but I think it is my colleagues, all my team is trading through Bookmap here, so nothing wrong to take Bookmap. Maybe I should simply take the time to go through and trade through Bookmap as well. And by the way, they have I think, very, very good, excellent DOM for trading as well. You know, it doesn't matter whether you are using Bookmap or you are using NinjaTrader or Sierra or whatever you are using. It doesn't matter what system you use to execute your trades. What matters is you should know when and why to enter. Then you can use different entry systems, of course. So I've missed to demonstrate what I'm doing here. Look here, that was the market volume stop. So because we have the discussion yesterday that not every one of these market volume stops is tradable. That's true. This is not a 100% system, but it is far, far better than any other system you will see on the market. And then what you can do is simply take the stop, draw a line. Either you're aggressive, take the short here because it's a red one, short, sell. You have a line here, and if that happens, that the market goes up, then look for shorts because it's red. Short means red. If it comes back, sell 29 again. It's simply a small trick. It's nothing special, but it keeps you always on the right side. If it jumps back and goes straight up, then you are not trapped here. You know, you are not in the wrong position here. Anthony is asking, can I have different settings for icebergs when it comes to visualizing it for alerts? I don't know what you mean by different settings. If you want to see every iceberg, you must set the order size trigger to 1, then you will see every one. If you want to see 10 and higher, then you should set it to 10. If you want to set it to 100, then set it to 100. You will see every single iceberg above 100. and every single iceberg below 100, it's here on in the graph, dynamic hidden order plot here, and in the hidden order dome here on this side, plot and dome. What I'm not interested. That is the ongoing discussion. I'm really, guys. I'm tired to talk about, but I'm not interested to see here 12, to see here 30, to see here 15, to see here 50, 60, 70, whatever. You know, to cluster my chart with numbers. This is not. You must ask yourself when you go this way. How does this help me to make money? Does it make me happy? Am I successful with this kind of trading? If so, then stay with it. If so, we stay with it. What I'm telling you, what my story here is, I just want to keep it as simple as possible. I don't want to overload my brain. I don't want to stay relaxed, calm, to understand what the market is doing. Then I'm able to pull the trigger. If I'm able to do so with a kind of certain with confidence, then I'm good and I'm happy because I did something. I'm not always right. That's not possible. That's not possible. But most of the time, I'm right. And then the second question you have to ask yourself is, what is enough for you? My impression is in this trading arena, in this trading business, is that everyone wants to trade every single minute of the day. It doesn't matter whether we have holidays. It doesn't matter we have Christmas, New Year Eve, or whatever. Everyone wants to trade in. Or some traders are in. Even if in the weirdest times, you know, it's the question you have to ask yourself: what is your aim in trading? What do you want to do? What is your goal? What do you want to achieve in trading? I'm very open on that, and maybe it's enough to get 10 points and then closing the screens and enjoy your life or doing anything. I think there's a lot of stuff around which is more meaningful than trading. So, my story is I want to keep it as simple as possible. I don't need to trade the whole day every 5 minutes. I don't need a signal every minute on my chart. I want to see the big ones, the big fives, the big signals, which will tell me possibly a story I can take, and then take the opportunity. If I've got my 10, 20 points, I'm happy to do anything else. So I'm very open on this stuff because meanwhile, in the last 2-3 years, while we are public here and exposing ourselves and our work here, a lot of people are trying to use the system as an instant system. They're not happy because not every one of these volume stops are working, and then they are disappointed and go to the next one. And that's the biggest mistake that a trader can make. I mean, if you have a system and the system works, don't change the system. That's very easy. Smokey, if you are using CVD, then please go to Bookmap and read what CVD is. I think you are referring to the CVD in Bookmap, which is a standard indicator. As I told you, it is simply an adding and subtracting volume. So it is a constant line up or a constant line down. It does not measure the no, CVD is something totally different. To stay anchored near the 0 point is something else, and something else we are working on that. I know that the API of Bookmap is a little bit different. We don't have or had the full insights on the API because of Bookmap. We rely on Bookmap, and that's not possible to, for example, in the last versions, to draw lines in different thickness and styles and so on. CVD is totally different. Load the CVD and compare it to the market volume stop. You will see the difference. This is a really simple adding and subtracting graph built in Bookmap, and CVD was one of the first indicators for Bookmap. It is still a very simple one. Smoky, that's big difference. But anyway, you can compare. You look here. That's quite easy to demonstrate. Maybe they changed something, but I'm not sure, so can't tell that. I'm just wondering if every stop and stop volume have a built-in feature where they decay back to the zero line, unlike. Yes, yes, I think so. I think yes, they have. So in the first time when I started with Bookmap, CVD was a very simple indicator. Maybe they changed it. I'm not sure. So I'm not watching the stuff. And if you have questions, yes, I see that we have built-in feature where they decay back to the zero line. Yes, they have a decay feature, especially the stop volume. That's what I wanted to say. It's a decay time. I must admit I'm not sure. Smoky mirror, I'm not sure. You have to. Can you please email support at TTW-Trader? The developers should answer that. I'm not sure. Thanks, John. Yes, it was. Yes, smoky mirror. So I suppose the idea behind the MV stop and stop volume indicators is to show you who is in control in real time, as well as plot divergences. Yes. Thanks for Smokey. Thanks for your question here. Yes, just to clarify, if you want to get more insights about the zero line and the behavior of different of this plots here, of the graphs here around the zero line, please email support at ttwtrader.com. We have had some issues, but I think we can manage that now with with the newest API of Bookmap to have all these lines synchronized on one zero line here. So the euphoria from yesterday and the 0.5 announcement of the rate hike wasn't as positive as it seemed day before with the CPI data. In this case, on my screen, you see in my screen you see the function of the variable settings. So we have here at that point 695 contracts, or spike, and excuse me, the spike size is 695. Here we have 1000, and you see the difference between the squares is dynamic or variable. So that is, it signalizes this is more important than, or has a higher importance because of the high numbers than one of 500, 400, or 600. So in return, you can see right now here that was, you see red is short. With this little technique, you can maybe prevent losses. With the bigger ones, I would have been aggressive here. Look for pullbacks, so I didn't took this one. But anyway, it was a great day. If I'm going back, let's have a look back here on the chart. What came in was this cluster of buyings here, or this cluster of green sweeps here at that point, 39.50. Then the bounce of the institution level here, first one. A sell one here again, retesting, that was my long position here. And because of this exciting situation, I was a little bit more too optimistic. But anyway, I've got 9 points out of this trade, catching the 36 here and trading into 47, I think it was 46, 47 here. That was, yes, I was stopped out. I'm trailed my position here, and let a trailing point or the stop level be in, and I was stopped out here with a very nice gain of 9 points. This guy lifted the, let me see if this, yes, he's still in. Lifted the Algo to 39.55. And still there, although the market is trading lower. The market is in a downwards trend, that means selling, we should look for the red, let me say, rectangles. I don't see any stop runs because I've set them a little bit higher. So maybe I'm a bit too optimistic. My stop runs are set to 400. That might be a little bit too high, but anyway, that's the style I'm using, how I'm using that. You can lower the numbers when the liquidity, when the volume is low. Depends on the time of day. You will see high volume at the beginning, you will see high volume at the end of the session. And then you can adjust at any time your settings here. They will dynamically be taken. So you don't need to restart TradeFinder. And since the market is down, we have red here, sell here, sell here, sell here, sell here. And that was maybe a loss here. That's how it is. We can't prevent. Let's have a look here again. That might be a very interesting one, because what I mentioned before is take a line or draw a line here. Because this is red, you should look short, you should look to sell here. It's not possible to get 100% signals, so just observe, know your risk and your trading style, and then take action. You will get enough along a trading day for yourself, for you to meet your goals, and to meet your goals with trading or in trading. Okay, ladies and gentlemen, thank you very much to be with me today. And in this exciting day, it was really surprising to see that and how trades can be executed. Missed a lot of trades here anyway, but it doesn't matter. You should be focused and not be distracted when you're trading. That's the best way. I have an Hawaiian, from Hawaii, and motto here. It's called. It's saying energy flows where attention goes. Energy flows where attention goes. So don't let you distract or be distracted from anyone. Focus on your goal, on trading, and then hopefully be a happy trader. That's all what counts. And take your time off. Thank you very much for being with me, and enjoy the coming holiday season. Take your time to think about trading and how you want to proceed next year. And first of all, family counts more than any trading. Your life counts more than any trading. If you can answer, you are a successful trader, and of course, you are a happy trader. You're really happy what you are doing. Then you are perfect. You're done. You got your goal. And so I wish you all the best. Be careful, and we speak next year, if you're so around. Thank you very much, and see you in the room, in the Discord room. So tomorrow, Philip is conducting the technical session, of course, and next week I'm not around. I will post the institution levels maybe next week as well, until Thursday or so, and then let's take a break. Don't overtrade and be a happy trader. Thank you very much, and I'm really happy to be with you in the Discord room. Thank you, and bye-bye.